Subscribe to LearnCab and hit the bell icon to get notified.
Rule 86B. Friends, we know what is Rule 86A. 86A, the proper officer can block the utilization of credit in certain special circumstances. Now friends, 86B. 86B restricts the utilization of credit. It places a restriction on the utilization of credit. In which manner? Let's have a look. 86B, notwithstanding anything contained in these rules, the registered person shall not use the amount available in electronic credit ledger to discharge his liability towards output tax in excess of 99% of such tax liability. So friends, the restriction which is placed is a registered person will not be in a position to utilize the balance or will not be in a position to utilize the electronic credit ledger balance in excess of 99%. 99% of what? 99% of input tax credit balance? The answer is no. 99% of output tax liability. Now, is it in all cases or in certain specified cases? Let's look further. In cases where the value of taxable supply other than the exempt supply and zero rated supply in a month exceeds 50 lakh rupees. So friends, in short it is trying to tell you in whichever month the value of taxable supplies, now taxable supplies obviously will include all those supplies on which there is a levy. So therefore, exempt supply also would be included in taxable supply. So hence they were further clarified, taxable supplies other than exempt supply and other than zero rated supplies, if it is going to exceed 50 lakh rupees. So if the value of taxable supply other than exempt supply and zero rated supply exceeds 50 lakh rupees in a month, then for that particular month, input tax credit will not be utilized. You cannot utilize input tax credit over and above 99% of the output tax liability. Let's have a look at the example. Let's say output tax is 10,000, assuming it to be in crores. Let's say output tax is 10,000, input tax credit is 11,000. Input tax credit is 11,000. Let's assume the condition of value of taxable supply exceeding 50 lakh rupees is being satisfied. So now output tax is 10,000, input tax credit is 11,000. So ITC to be used, what is the amount of input tax credit which you can use it? It is 99% of the output tax liability, which means that you will be in a position to use input tax credit only to the extent of 99% of 10,000, which is 9,900 rupees. So therefore friends, your output tax is 10,000, input tax credit which is available for utilization is only 9,900. Although the balance available in the electronic credit ledger may be 11,000 rupees, but the amount which is available for utilization is only 99% of your output tax liability. So which means that 9,900 rupees can be paid from your electronic credit ledger. So total liability 10,000, 9,900 rupees to be paid from your credit ledger. So balance is payable in cash. So 100 rupees you are supposed to pay it in from your electronic cash ledger. So after you pay that, what is the amount of credit which is going to be carried forward? Friends, credit to be carried forward, ITC total available was 11,000 rupees. You have utilized 9,900 rupees. 1,100 rupees is the credit which will be carried forward to the next month. Now friends, what does the government gain out of it? Friends, please understand, had 86B not been there, what would have been the answer? Let's keep output tax at 10,000. Input tax credit available is 11,000 rupees. ITC to be used. Now my output tax is 10,000 rupees. This output tax of 10,000, I have got a sufficient balance of 11,000 in my credit ledger. I will use the entire balance. I will be using entire 10,000 rupees. I will be using entire 10,000 rupees from my credit ledger to pay my output tax liability. So how much is going to be payable in cash? It is going to be 0. My output tax is 10,000. I've got 11,000 balance in my credit ledger. I use 10,000 out of it to pay my output tax liability. So now friends, after this, the credit which is going to be carried forward is going to be rupees 1,000. So if 86B is applicable, I carry forward a credit of 1,100. If 86B is applicable, I carry forward a credit of 1,100. If 86B was not there, I would have carried forward a credit of 1,000. Now friends, why is this different of 100? This difference of 100 is because here you have paid in cash. When 86B is applicable, you have paid through your electronic cash ledger 100. So therefore, this amount which you have paid from your electronic cash ledger 100, to that extent you have not utilized your electronic credit ledger. So therefore, your electronic credit ledger balance would become 1,100. So friends, out of this, the government is going to gain 100 rupees. The government is going to save its working capital. So here the government is going to get 100 rupees in its from electronic cash ledger. The amount is going to go directly to the bank account of the government. So this is the impact of 86B. Now friends, let's have a look at the applicability. Applicability, it says that when does 86B apply? It applies for those months where the value of taxable supplies other than exempt supplies and zero rated supplies exceeds 50 lakhs. So friends, if taxable supplies is 10 lakhs, if your taxable supply is 10 lakhs and exempt supply is 45 lakhs, total, yes, obviously it does exceed 50 lakhs. But here friends, it tells you the value of taxable supply other than exempt supply and zero rated supply, only if it is exceeding 50 lakhs, only then 86B is applicable. Here friends, as regards as taxable supply is concerned, it is 10 lakhs. Exempt supply, you need not consider it for the purpose of calculation of the threshold of 50 lakh rupees. So friends, here 86B is not applicable. Let's say in case number 2, taxable supply is 10 lakhs, export supply is 45 lakhs. Friends, please concentrate. For the purpose of threshold, it is taxable supply other than exempt supply and zero rated supply. Only if it is exceeding 50 lakhs, 86B is applicable. So here also 86B is not applicable. Now friends, your taxable supply is 60 lakhs and export supply is 45 lakhs. So now friends, your taxable supply other than exempt supply and zero rated supply, does it exceed 50 lakh rupees? The answer is yes. So therefore 86B is applicable. Let's take another scenario friends. Let's say in the tax period April, taxable supply is 60 lakhs, exempt supply is 15 lakhs. So does my taxable supply other than exempt and zero rated exceed 50 lakh rupees? The answer is yes. Is 86B applicable? The answer is yes. 86B is applicable. Now friends, please tell me, if 86B is applicable for one particular month of a financial year, does it mean that 86B would apply for all the subsequent tax periods also? The answer is no. Friends, as regards as the 86B's applicability is concerned, it needs to be checked on a month-on-month basis. For the month of April, please concentrate here. It is being mentioned that in cases where the value of taxable supply other than exempt supply and zero rated supply in a month exceeds 50 lakh rupees. So the applicability of rule 86B needs to be computed, needs to be checked on a month-on-month basis. So friends, for the month of May, let's say my taxable supply is 10 lakhs, export supplies are 45 lakhs. So does my taxable supply other than exempt supply and zero rated supply exceed 50 lakh rupees? The answer is no. So therefore 86B is not applicable for the month of May. For the month of June, let's say taxable supply is 60 lakhs, export supply is 45 lakhs. Does my taxable supply other than exempt and zero rated supply exceed 50 lakh rupees? The answer is yes. So therefore 86B is applicable. So friends, the conclusion which we are arriving at is, as regards as the applicability of 86B is concerned, it needs to be checked on a month-on-month basis. Now friends, let's take a case. There is a company ABC Limited. It is registered in Tamil Nadu and also it is registered in the state of Karnataka. So one company having two different GST numbers, one in Tamil Nadu, one in Karnataka. Let's say for a particular month, let's say for a particular tax period April, The taxable supplies, of course, other than exempt supplies and zero rated supplies of Tamil Nadu are 45 lakhs. The taxable supplies other than export and exempt supplies, other than zero rated and exempt supplies in the state of Karnataka are 40 lakhs. Now friends, please tell me whether 86B is applicable or not applicable. Now the question is, as regards as the value of taxable supplies is concerned, that 50 lakh rupees, should I check it PAN number wise or should I check it GSTIN wise? I repeat, friends, the 50 lakhs threshold, should it be checked PAN number wise or it needs to be checked GSTIN wise? Friends, let's have a look at 86B. It tells us, notwithstanding anything contained in these rules, the registered person shall not use the amount available in electronic credit ledger. Friends, what do you mean by a registered person? Friends, each GSTIN is a separate registered person. As far as this example is concerned, ABC Limited of Tamil Nadu is a separate registered person. ABC Limited of Karnataka is a separate registered person. So friends, 86B applicability is upon the registered person. The registered person shall not use the amount available in the electronic credit ledger to discharge his liability towards output tax in excess of 99% of such tax liability in cases where, does it tell you, the aggregate turnover other than exempt supply and zero rated supply crosses 50 lakh rupees? Does it use the wordings aggregate turnover? The answer is no. It uses the wordings where the value of taxable supplies other than exempt supplies and zero rated supplies. So friends, what is meant by value of taxable supply? Supply is going to be made by each GST registered person. Supply is unique to each GSTIN. The wordings which have been used over here is not aggregate turnover, wherein as regards as aggregate turnover is concerned, aggregate turnover is not unique to each GSTIN. It is a PAN based turnover. But friends, as regards as 86B is concerned, it is specific to a registered person and it is specific to the value of taxable supply of that registered person. So therefore friends, this limit of 50 lakh rupees needs to be looked GSTIN wise and not PAN wise. Although this person, ABC Limited, PAN based turnover crosses 50 lakh rupees. But friends, GSTIN's turnover for this particular tax period doesn't exceed 50 lakh rupees. So therefore friends, 86B is not applicable. 86B is not applicable, neither it is applicable in Tamil Nadu nor it is applicable in Karnataka. Friends, let's just twist this example. Let's say in case of Tamil Nadu, if the taxable supplies was 45 lakhs and in Karnataka if the taxable supply was 55 lakhs. Now friends, whether 86B is applicable, friends please understand 86B needs to be checked GSTIN wise. So friends, as regards as Tamil Nadu's GSTIN is concerned, it is 45 lakhs, so therefore 86B not applicable. As regards as Karnataka's GSTIN is concerned, it has exceeded 50 lakhs, so therefore 86B is applicable. So friends, 86B needs to be checked GSTIN wise and not PAN wise. Now friends, let's take an example. I am sure by now the base concept of 86B would have already synced inside you. It says that for a registered person whose value of taxable supplies other than exempt supplies and zero rated supplies, if it is exceeding 50 lakh rupees, then that registered person will not be in a position to utilize input tax credit in excess of 99% of output tax. It is so simple. Now friends, let's take an example. Let's say output tax for a particular tax period is 10,000. Let's assume it to be in crores. Output tax is 10,000. Input tax credit excluding reverse charge mechanism is 12,000. Input tax credit excluding RCM is 12,000. RCM tax is 1,000. Reverse charge mechanism taxes is 1,000. Now we have, so these are the facts which are given in the question. Output tax is 10,000. Input tax credit excluding reverse charge is 12,000. RCM tax is 1,000. So friends, as we all know, RCM tax needs to be paid in cash and input tax credit can be availed in the very same month for the tax period for which reverse charge taxes has been paid. So friends, what is the total liability including RCM? The total liability including RCM, output tax liability is 10,000, RCM tax liability is 1,000, 11,000 is the total liability including reverse charge. What is the total input tax credit including RCM? Total input tax credit including RCM is going to be 13,000 rupees, 12,000 rupees regular ITC, 1,000 rupees ITC of RCM. So total input tax credit including RCM is 13,000. Now friends, amount which is payable in cash, amount which is payable in cash, of course RCM liability I will have to pay it in cash only. So I pay 1,000, RCM liability of 1,000 is being discharged through cash ledger. How much is payable in credit? How much is payable in credit? Now friends, let's take scenario number 1. Let's take scenario number 1. This aspect will define it as scenario number 1. And in this logic of scenario number 1, let's try and analyze whether 86B is getting satisfied. Now friends, 1,000 is my RCM liability, I have discharged it through cash. What is my regular liability other than the RCM liability? It is 10,000. It is 10,000. Assuming this output tax liability of 10,000, if I am discharging it entirely from my electronic credit ledger, if I am discharging it entirely from my electronic credit ledger, then output tax liability is 10,000. So payable in credit, that means whatever is my output tax liability, totally I have paid it through credit. 10,000 is paid through electronic credit ledger. Now friends, how much is going to be the ITC carry forward? In this method, ITC carry forward is going to be 3,000. Friends, total ITC is 13,000. I've used 10,000 for payment of, output tax. Thereafter, I have an ITC carry forward of 3,000. Now friends, please tell me, is it complying with 86B? Friends, what does 86B tells you? 86B tells you that out of the total liability, not more than 99% can be paid through electronic credit ledger. Are we clear? Out of the total liability, not more than 99% can be paid through my credit ledger, which simply means that the input tax credit balance which is available with me, I can utilize it only maximum to the extent of 99% of the output tax, which if I put it otherwise it means that the output tax liability which is there, that output tax liability, to discharge this output tax liability, I cannot use my input tax credit ledger exceeding 99%. So friends, can I rephrase this sentence in this way and say that at least 1% of the total liability needs to be paid through my cash ledger? At least 1% of the total liability needs to be paid through cash ledger. Can I say so? Friends, when I say that the total liability, electronic credit ledger cannot be used more than 99%, which means that at least 1% should be paid from my electronic cash ledger. Are we clear so far? Yes. Now please tell me, in this method which we have adopted, have I discharged at least 1% of the total liability from my electronic cash ledger? Have I discharged at least 1% of the total liability through my electronic cash ledger? Friends, what is the total liability? Total liability is 11,000. I repeat, total liability is 11,000. How much have I paid? Through cash ledger? I have paid 1,000 through cash ledger. Now friends, let's say if I say 1,000 is what I have paid from cash ledger, 1,000 is what I have paid from my cash ledger, divided it by total liability. Total liability is how much? Total liability is 11,000, which means that 1,000 divided by 11,000, it is 9.09%. I repeat, it is 9.09%. The total liability which is available, I have discharged 9.09% through my cash ledger. have I validly complied or have I complied Rule 86B correctly? Friends, let's have a look at Rule 86B. What does it tell us? It tells us that the registered person shall not use the amount available in the electronic credit ledger to discharge his liability towards output tax in excess of 99% of such tax liability. Friends, please understand, it tells us that whatever is the total output tax, to discharge his output tax, maximum credit what you can use is 99% of this output tax, which means that 1% of this output tax needs to be paid through electronic cash ledger. Friends, please concentrate. It doesn't use the wordings towards total liability. It uses the wordings towards output tax. Now friends, in this example, how much is the total liability? Total liability including RCM is 11,000. But how much is the output tax? Friends, please concentrate. Out of this 11,000, 1,000 is towards RCM, and as you all know, RCM liability is not an output tax liability. RCM liability is not an output tax liability. In fact, you are paying RCM taxes for the inward supplies which are being received. It is not at all an output tax. So therefore, step number 1, compute what is your output tax. Output tax is how much? Output tax is 10,000. Output tax is 10,000. Now, to discharge this 10,000 rupees, how much credit balance you can use? You can use only 99% of this 10,000. How much credit balance have you used? Payable through credit. Entire 10,000 liability you have discharged it through credit ledger only. So therefore, this is not a sufficient compliance of Rule 86B. What does Rule 86B tells you? Your output tax. It says ignore RCM liability. Take only the output tax. Whatever outward supplies you have made, take the tax upon that is the output tax. That output tax 99% can be discharged. Maximum 99% can be discharged from your credit ledger. Balance 1% needs to be paid through the cash ledger. So friends, what should be the solution? The solution should be in this way. 10,000 is your output tax. ITC excluding RCM is 12,000. Fine. RCM tax 1,000. The facts remains the same. Now, total liability including RCM is how much? 11,000. Total ITC including RCM is how much? 13,000. Now, how much is payable in cash? How much is payable in cash? Friends, 1,000 is payable in cash. I already know it. Even without 86B, I know that 1,000 is payable through cash because 1,000 is RCM liability. So 1,000 I pay through cash, which is for RCM liability. Now friends, what is my output tax? My output tax is 10,000. At least 1% of this output tax should I pay through my cash ledger? The answer is yes. According to 86B, at least 1% of this output tax needs to be paid through cash. So friends, 1% of 10,000 is 100. So how much is payable in cash? 1,100 is payable through cash. 1,100 is payable through cash. How much is going to be payable through credit? 9,900. How do we arrive at 9,900? Friends, please understand, my output tax was how much? 10,000. How much did I pay through this cash for this output tax? 100. What remains? 9,900. Another way to look at it, what is the total liability including RCM? 11,000. How much have I paid through cash? Totally 1,100. What is the balance which is payable through credit? 9,900. So friends, 9,900 I'll be in a position to utilize the input tax credit. After I utilize this credit of 9,900, what remains in my electronic credit ledger? So electronic credit ledger, total ITC available 13,000, already utilized 9,900. Carry forward ITC is 3,100. Carry forward ITC is 3,100. Now please look at the difference. ITC carry forward, here it was 3,000, here it is 3,100. Why it is excess over here? Because 100 rupees you have paid it through cash ledger. You did not utilize the input tax credit. Rule 86B did not allow you to use this 100 rupees from your electronic credit ledger. So therefore, electronic credit ledger did not get debited to the extent of 100 rupees which you have debited your electronic cash ledger. So therefore, the cash which you have invested is lying as a closing balance in your electronic credit ledger. The cash, additional cash which you have invested rupees 100. The reason why we are saying it is additional cash which you have invested 100 is because this 100 what you are paying is because or it is by virtue of rule 86B. So therefore, here you will have an ITC carry forward of 3100. So friends, what is the bottom line? The crux is if the taxable supplies other than exempt and zero rated supplies exceeds 50 lakhs per month, if the taxable supplies other than exempt supplies and zero rated supplies, if it is exceeding 50 lakhs per month, then for that particular month 86B is to be applied on month basis. For that particular month, only up to 99% of the tax liability. Which tax liability? It is the output tax liability. Only up to the 99% of the output tax liability can be discharged by the credit ledger, which means that at least 1% has to be discharged by the cash ledger. And friends, RCM liability always has to be discharged only through cash ledger, and it should not be considered for the computation of 1%. Whenever you are going to compute that, at least have to pay 1% through cash ledger. In that computation, you just take the normal output tax liability. Do not consider RCM tax liability. And whatever you have paid through cash ledger, consider only what you have paid through the cash ledger for your output tax. You might have paid RCM liability also through your cash ledger. That you should not consider for the purpose of computation of 1%. So in simple terms, friends, 86B tells you if the particular month attracts rule 86B, then compute what is your output tax. What is meant by output tax? Other than RCM liability, it is your output tax. Compute your output tax. At least 1% of that needs to be paid through electronic cash ledger. In addition to it, RCM liability will always be paid through electronic cash ledger only. If you remember this is more than sufficient for forming a strong foundation regarding 86B. Let's take this case, friends. Let's say for a particular tax period, these are the details which are given. Output, it is zero rated supplies which is made under letter of undertaking, 10,000. GST is nil because he is making a zero rated supplies under a letter of undertaking. Output GST at 5%, 1,000. GST thereon is 50. This is not a zero rated supply, it's the regular domestic supply. Input, please let us assume everything is in crores because 86B would apply only when value of taxable supplies exceeds 50 lakhs in a month. So please assume everything is in crores. So output GST at 5% is 1,000 and 50. 50 is GST thereon. Input GST at 5%, inward value is 6,000, GST thereon is 300. Now friends, what does 86B tell you? 86B tells you if the value of taxable supplies other than exempt and zero rated supplies in a particular month, if it is exceeding 50 lakhs, does it exceed in this particular month? Yes. If it is exceeding 50 lakhs, then you can utilize or you can pay the output tax from your electronic credit ledger only to the extent of 99% of the output tax. So friends, now ITC to be utilized, although ITC available is to the extent of 300, although input tax credit available is to the extent of 300, but can he utilize this 300 entirely for the payment of his output tax? The answer is no. How much is his output tax? 50. Of this output tax 50, at least 1% he has to pay from his cash ledger. So friends, how much he needs to pay from his cash ledger? From his cash ledger, it is going to be 50 multiplied by 1%. At least 0.5 needs to be paid from cash ledger. So friends, 99% he can pay it through his credit ledger. So 50 multiplied by 99%, 49.5. So friends, this liability of 50, 49.5 will be from electronic credit ledger and 0.50 will be from his electronic cash ledger. And friends, what is going to be the ITC carry forward after this calculations happen? ITC carry forward is going to be, you have 300 minus 49.5 is being used, so it is 250 rupees and 50 paise. Now friends, this is the applicability of 86B. Now friends, the taxpayer is agitated. This particular registered person is agitated because friends, please understand, this person is making a zero rated supply. Now friends, when a person is making a zero rated supply, let's say under LUT, should he get a refund from the government, or should the government ask him tax from his electronic cash ledger? Friends, the scenario is, any person who is making a zero rated supply under LUT, he could claim a refund of the accumulated balance of input tax credit. Accumulated input tax credit can be encashed, a refund can be applied by a person who is making a zero rated supplies. But here the case is different. Here, rather than refunding him the balance of the accumulated balance of his electronic credit ledger, the government is increasing the balance of his electronic credit ledger. How is the government increasing the balance of his electronic credit ledger? The government has asked him, do not pay your entire liability from the credit ledger. Only to the extent of 99% of the output tax liability, you can use your credit ledger, which means the balance I'll be paying from the cash ledger. To the extent I'm paying from the cash ledger, that is automatically going to add up my balance of electronic credit ledger. Friends, let's suppose if 86B was not there, what would have happened? If 86B was not there, here ITC to be used, these figures would have remained the same. Output is 50, input is 300. ITC to be utilized, he would have utilized entire 50 from his electronic credit ledger. Payable in cash 0, credit carry forward 250, and thereafter he would have gone and applied for a refund of this accumulated input tax credit based on the formula which is given. Now by introduction of 86B, are the exporters going to face the heat of 86B? The answer is yes. As regards as these exporters are concerned, here this 86B is going to, rather than decrease the balance of electronic credit ledger and provide them refund, 86B is going to increase their balance in electronic credit ledger by forcing the exporters to pay additionally through electronic cash ledger. This is going to be a working capital loss for the exporters. So therefore, should there be any relaxation given? The answer is yes. Let's have a look if there is any relaxation. So 86B exceptions. These are the exceptions to 86B, which states that, second exception, we'll see the first exception little later on. The registered person, if he has received a refund amount of more than 1 lakh rupees in the preceding financial year on account of unutilized ITC under clause 1 of first proviso to subsection 3 of section 54. Friends, let's ignore the reference to the section which is being given. Just understand, as regards as a person who is making a zero rated supplies under LUT is concerned, he is entitled to claim a refund of his accumulated input tax credit. He is entitled to claim a refund of his unutilized input tax credit. Now friends, what is the relaxation which is given? Does the relaxation say that 86B will not apply for exporters? The answer is no. It goes on further. It goes on further and says that 86B will not apply to those exporters. It is not a blanket relaxation given to all the exporters. It says 86B will not apply to those exporters who have claimed a refund of an amount exceeding rupees 1 lakh in the preceding financial year for making zero rated supplies under letter of undertaking. I repeat, if there is any exporter who has claimed a refund of an amount exceeding rupees 1 lakh in the preceding financial year, for what reason? For the reason of having made a zero rated supply under LUT, he has claimed a refund of unutilized input tax credit, then for that particular exporter in the current financial year, 86B will not apply. So friends, this is a relaxation which has been given. In this case, 86B is not going to apply. Let's have a look at another case. Let's say friends, output supplies value 10,000, GST thereon is 500. We are assuming all the figures are in crores. Input GST at 12%, value is 6,000, ITC 720. Now friends, if you carefully look at his business, the rate of tax which is applicable on his inward supplies, the rate of tax which is applicable on his inward supplies is greater than rate of tax which is applicable on his output tax. Let's suppose he is a manufacturer, he purchases raw materials. His inwards are taxable at 12%, his outward is taxable at 5%. Now friends, let's say if 86B is applicable. If 86B is applicable, in those cases, friends, please understand, as regards as 86B is concerned, at least 1% of your output tax, at least 1% of your output tax needs to be paid through your electronic cash ledger. So now friends, how much is his output tax? His output tax is 500. At least 1% of this he has to pay from electronic cash ledger. So how much is payable in cash ledger? Here we go, 500 into 1%. 5 he has to pay it from his cash ledger. How much he can pay it from his input tax credit? From his input tax credit, he'll be in a position to pay 495. Out of 500 total liability, 495 he'll be paying from his credit ledger, 5 he would be paying it from his cash ledger. So now friends, what is this going to be the carry forward balance in his electronic credit ledger? Electronic credit ledger, he has got a balance of 720, out of which 495 he has utilized for the payment of output tax. Now the balance which is available is 225, the balance available in his electronic credit ledger. Friends, is it not that 86B is too harsh on him? Please understand friends, here this particular person, in his business model, he would never have a chance, to pay an amount from his electronic cash ledger. The reason being, since the rate of tax on his inward supplies is greater than the rate of tax on his outward supplies, for him credit is always going to get accumulated. For him, the credit is always going to be accumulated. So now friends, 86B is adding fuel to the fire. It is adding the credit which was even otherwise getting accumulated. 86B is increasing that accumulation. How is it increasing the accumulation? Let's imagine a scenario without 86B. What would have happened without 86B? Same output 500, input 720, ITC to be utilized. The entire output tax he would have paid from his electronic credit ledger. So therefore, 500 rupees he would have paid from his electronic credit ledger. Balance payable in cash would have been 0. Credit carried forward would have been 220. Because of 86B, credit which is getting carried forward is 225. Credit getting carried forward is 225. This incremental 5 is because of what reason? It is because of 86B, this person was forced to pay 5 from his electronic cash ledger. Now friends, this person is agitated. This person is agitated because he says, because of the tax structure of the government, that my inward is taxable at 12, outward is taxable at 5, I am getting my input tax credit already getting accumulated. This is already a working capital issue for me. I have to go and apply for a refund of this accumulated input tax credit because my tax structure is inverted duty structure. Over and above this, because of 86B, you are further increasing my working capital problems. Should there be a solution to this? Should 86B not apply to those persons whose tax structure is inverted duty structure? The answer is yes. But is a blanket exemption given? The answer is no. The exemption is similar to the exemption which was given to the exporters. Let's have a look at the exclusions. The exclusions, second one we have already done. The third concern. The registered person has received a refund of amount more than rupees 1 lakh in the preceding financial year on account of unutilized input tax credit under clause 2 of first proviso of subsection 3 of section 54, which simply means that you have applied for a refund of an amount exceeding rupees 1 lakh in the preceding financial year. For what reason? Because your tax structure was inverted duty structure. Friends, if your input tax credit is getting accumulated, then you can apply for a refund only for 2 reasons. 1, you should be making a zero rated supplies. 2, your tax structure should be inverted duty structure. For these two reasons, if your input tax credit is getting accumulated, the government permits a refund to you. And for these two reasons, 86B is not applicable for you. But friends, for these two reasons, there is an additional condition which is stated that you having made a zero rated supply or your tax structure having an inverted duty structure, if you have received a refund of an amount exceeding rupees 1 lakh from the government in the preceding financial year, then in the current financial year 86B is not applicable. So friends, as regards as these two exclusions are concerned, I am sure you are able to follow this. In simple terms, it is something like this. 86B says that at least 1% of your output tax liability needs to be discharged from the cash ledger. However, because of this 86B, where the intention of the government otherwise was to reduce the accumulation in the electronic credit ledger and grant the refund to the registered persons, in which cases, in the cases of those persons who are making a zero rated supply, in the cases of those persons whose tax structure is inverted duty structure. Otherwise, the intention of the government was to reduce the balance of their electronic credit ledger by granting them a refund. Now, because of this 86B, that objective of the government is not being served. So therefore, 86B carves out an exception for the objective of the government being served, and it states that it is not a blanket exemption, and it states that all those persons who are making zero rated supplies, all those persons whose tax structure is inverted duty structure, if in the preceding financial year they have received a refund of an amount exceeding rupees 1 lakh for making zero rated supplies under LUT, for inverted duty structure, if they have received an amount exceeding rupees 1 lakh, if they have received a refund of an amount exceeding rupees 1 lakh out of their unutilized input tax credit, then in the current financial year 86B shall not apply. Friends, we are into 86B. We have seen the base provisions. We have also discussed two relaxations, two exceptions to 86B. We move on further. Now friends, what is the reason behind introduction of Rule 86B? Friends, what was the reason behind introduction of Rule 86A? Input tax credit frauds. The quantum, the volume of input tax credit frauds were increasing. So therefore, the government introduced 86A. That is, wherever the government has gathered intelligence, wherever the government has got person specific information, registered person specific information that this person appears to be indulged in carrying out input tax credit frauds. This registered person appears to be carrying out input tax credit frauds. So therefore, let's block the utilization of credit of this particular person. But friends, it is not necessary that always the government has got registered person specific information. It takes time to gather registered person specific information. So meanwhile, the government has planned to introduce a rule which is generally applicable for all registered persons who are having turnover beyond a threshold limit. That is 86B, wherein it states that if at all this person is indulged in carrying out input tax credit frauds at a larger level, he will have to pay 1% at least from his cash ledger. So friends, please understand 86A, the focus is person specific. 86B, since it takes a lot of time for the government to gather intelligence, for the government to collect information against a specific person, till such time the government wants to have a general check. The government wants to have a general check, restrict the utilization of input tax credit at a general level. So friends, the intent behind both 86A as well as 86B is to keep a check, on input tax credit frauds. Agreed. Now friends, certain registered persons who are having a proven track record, they are agitated. They say that we have been registered under GST for a long time. We have been, please check a track record. We have been complying with the laws. We have been complying with all the applicable laws which are there. Let it be Income Tax Act, let it be GST law. And if you look at the history of input tax credit frauds, they are generally done by new registrants. Those registrants who might not even have a history under the income tax law, who might not even have paid income tax. They apply for a PAN number, apply for a GST number and carry out input tax credit frauds. So if you look into the pattern, should you not give some relaxation to those registered persons who are having a proven credible track record? The government found weight in the argument. So therefore, now we have few relaxations for those registered persons who have got a proven track record. So friends, the relaxation, the first one is proven track record in income tax law. Provided that the restriction shall not apply, 86B shall not apply where the said person or the proprietor or the karta or the managing director or any of its two partners, two whole-time directors, two members of managing committee of associations or two board of trustees, as the case may be, have paid more than 1 lakh rupees as income tax under the income tax law in each of the last 2 financial years, for which the time limit to file the return of income tax under subsection 1 of section 139 of the said act has expired. So friends, in short, it is trying to tell you, if either the person himself, let's suppose it is speaking about a company who is a registered person, so the company himself, or the proprietor, if it is a proprietary concern, the proprietor, or the karta, if it is a Hindu undivided family, the karta, or the managing director, if it is a company, the managing director. So as regards this company is concerned, if either the company has paid income tax exceeding rupees 1 lakh in the last 2 preceding financial years, or the managing director has paid it, if either of the two has paid it, 86B will not be applicable. So friends, either the said person or the proprietor or karta or managing director or any of its two partners or two whole-time directors or two members of managing committee of associations or two board of trustees, as the case may be, if they have paid more than 1 lakh rupees as income tax. Now the wordings are very, very important. In each of the last 2 financial years, for which the time limit to file the return of income tax under 139 subsection 1 has expired. Let's take few examples. Now friends, let's say for the tax period April, total liability is 5 lakhs. Total input tax credit available is 6 lakhs. Now friends, this particular person, income tax paid for financial year 2021, we are speaking about April 2021. We are going to check whether for April 2021 86B is applicable or it is not applicable. What difference would it make, friends? Friends, if 86B is applicable, how much he needs to pay from cash? Total liability is 5 lakh. 5,000 rupees, 5,000 he'll have to pay it from cash, and 4,95,000 he'll be paying from his credit ledger. However, if 86B is not applicable, entire 5 lakhs he'll be paying it from his credit ledger. So there is an additional cash of 5,000 which is required if 86B is applicable. So let's have a check at the applicability. The data given is for financial year 2021. We are speaking about the tax period April 21, where the financial year 2021 has already lapsed. Financial year 2021 income tax return is not filed. The due date happens to be 30th of September 2021, assuming. Financial year 1920 income tax paid is 1,50,000. Financial year 18-19 income tax paid is 1,85,000. So now friends, you need to check preceding 2 financial years whether income tax paid is greater than 1 lakh or not. But which 2 preceding financial years? Is it 1920 and 2021, or is it 1819 and 1920? Friends, if it is 1819 and 1920, yes, relaxation is available because he has paid more than 1 lakh. If it is 1920 and 2021, relaxation will not be available because for 2021 he has not yet filed his income tax returns. So which financial years are we supposed to take? Friends, it says for each of the last 2 financial years for which the time limit to file the income tax return under 139 subsection 1 has expired. So now friends, whether the time limit to file income tax returns for financial year 2021 under 139 subsection 1 of income tax has expired, the answer is no. So we are not going to consider this financial year. So we have financial year 1920. Whether for financial year 1920, when we are sitting in April 2021, The time limit to file income tax returns under 139 subsection 1 has expired. Yes. So we are going to take 1920. For the same reason, we are also going to take financial year 1819. In each of these two financial years, it doesn't say in either of the two financial years. It says in each of the two financial years, income tax paid should be greater than 1 lakh. Has he paid it? The answer is yes. Is 86B relaxed for him? The answer is yes. 86B is not applicable for this person, which means that entire 5 lakh liability can be paid through electronic credit ledger. Let's take another case. For October 2021, we are speaking about a tax period October 2021. Total liability 5 lakhs, ITC available 6 lakhs. The data is given. For financial year 2021, when he is in October 2021, the expired financial year is financial year 2021, 1920, 1819. So for financial year 2021, ITR is not yet filed. What was the due date? 30th September 2021. 1920 ITR is filed 1,50,000. 1819 ITR is filed 1,85,000. Now the question is, which two preceding financial years you are going to take? You are going to take those two preceding financial years for which the due date to file income tax return under 139 subsection 1 has expired. So I am going to take financial year 2021 and 1920. Now friends, in each of these financial years, whether income tax exceeding 1 lakh has been paid, the answer is no. So friends, since the answer is no, he is not covered by the exception. 86B is applicable to him. In this case, for the particular tax period October 2021, rupees 5,000 he has to pay from his electronic cash ledger. Total liability is 5 lakhs, at least 1% to be paid from the electronic cash ledger. 5,000 has to be paid from cash ledger. Another case, let's suppose it is for the tax period June 2021. It's for the tax period June 2021. Total liability 5 lakhs, ITC available 6 lakhs. Let's have a look at the data. Financial year 2021. He has paid an income tax of 1,25,000. He has paid an income tax of 1,25,000, which means he has filed his income tax returns. Now friends, the fact is, ITR is filed on 15th of June itself. Proactive assessee files income tax returns on 15th of June. The due date of ITR is 30th of September. The due date of ITR is 30th of September. For 1920, he has paid income tax of 150. 1890, he has paid income tax of 85. Friends, if you have a general understanding, things won't work out in tax laws. Had you got a general understanding, what would have been the answer? Last 2 years, okay, 125, 150, agreed. 86B not applicable. But friends, the wordings are very, very specific. Technically, the wordings says that which two financial years are you supposed to take? Does it say you take those two financial years for which income tax return is filed? The answer is no. It tells you take those two financial years for which the due date to file income tax returns under 139 subsection 1 has expired. Now friends, the due date for financial year 2021, when is wants to analyze the applicability of 86B in June 2021, has the due date expired? The answer is no. The due date is going to be 30th of September. So for financial year 2020-21, when is sitting in June 2021, the due date for 2021 financial year to file income tax returns has not expired. So you are not going to consider financial year 2021. The two financial years which you are going to take are going to be 1920 and 1819. And has he paid an income tax exceeding 1 lakh rupees in each of these two financial years? The answer is no. He has paid 150 over here. Here it is below 1 lakh, it is 85,000. So friends, for the tax period June 2021, sadly 86B is applicable for him. 86B is applicable for him. In this case, total liability 5 lakhs, 5,000 he has to pay from his cash ledger. At least 5,000 he has to pay from his cash ledger. Another case about tax period October 2021. Tax period October 2021, liability 5 lakhs, ITC available 6 lakhs. Period financial year 2021. Financial year 2021, income tax paid is 1,25,000. ITR is filed on 15th of June. Due date happens to be 30th of September. For 1920, tax paid 1,50,000. Now friends, I am sure you are able to answer this. You need to take 2 financial years. Yes. Which 2 financial years? Those 2 financial years for which the due date to file income tax returns under 139 subsection 1 of the income tax law has expired. When it wants to analyze it for October 2021, has the due date to file income tax returns for financial year 2021 already expired? The answer is yes. The due date was 30th September 21. Are you going to consider this financial year? Yes. This financial year? Yes. In each of these 2 financial years, has he paid income tax greater than 1 lakh? Yes. So therefore, is the relaxation available? Relaxation is available. 86B is not applicable to him. So friends, this was the relaxation in relation to proven track record under the income tax law is concerned. Friends, the relaxation is very simple. There are 2 steps. Step number 1, you have to trace out the person, you have to zero in the person whose income tax returns you are supposed to see. Whose income tax returns are you supposed to see? Either the registered person himself, his income tax returns, or the proprietor or the karta or the managing director. Here onwards it is plural, or any of its 2 partners. Let's suppose there are 10 partners. For any of these 2 partners, if this condition is getting satisfied, 86B will not be applicable. 2 whole-time directors, 2 members of managing committee of associations, 2 board of trustees, as the case may be. So friends, these guys should have paid income tax more than 1 lakh for 2 preceding financial years. Which 2 preceding financial years? Those 2 preceding financial years for which the due date to file income tax returns under 139 subsection 1 has expired. We are looking into the relaxations of 86B. We have just seen relaxations as regards as proven track records as concerned. We have completed relaxations with regard to proven track records in income tax law. Now we move on, relaxation with regards to proven track records in GST law. Let's have a look. Provided that the said restrictions shall not apply where the registered person has discharged his liability towards the output tax through the electronic cash ledger for an amount which is in excess of 1% of total output tax liability applied cumulatively up to the said month in the current financial year. So friends, what it is trying to tell you? It is trying to tell you 2 things. Point number 1, 86B need not be satisfied on a month-on-month basis. It is sufficient if you are satisfying 86B on a cumulative basis. 86B need not be satisfied on a month-on-month basis. It is sufficient if you are satisfying 86B, if you are complying with Rule 86B on a cumulative basis for a financial year. Let's suppose for a particular financial year, let's say for the tax period August. For the tax period August, if you want to check the applicability of Rule 86B, then what you need to do is take the total liability from April onwards, including the month of August, keep it on one side, check what is the amount which you have paid through electronic cash ledger. The amount which is paid from the electronic cash ledger, if it is exceeding 1% of the total liability, including that of the current month, you have already satisfied Rule 86B. However, point number 2, if that is not getting satisfied, then what is the shortfall? You need to fulfill the shortfall. We'll take examples, you will be able to understand. Let's say for the month of July, the total liability is 5 lakhs, input tax credit available is 6 lakhs. The history is given. For the month of April, total liability was 10,000, credit was 8,000, from cash it is paid is 2,000, May 10,000, 7,000, 3,000, for June it is 20,000, credit 19,000, cash 1,000. So total liability is 40,000, paid through credit is 34,000, paid from cash is 6,000. Now friends, I have already paid 15% of the total liability from cash ledger, which means that I have already satisfied Rule 86B. This is a wrong conclusion. Friends, please pay careful attention to the wordings. What does the wording say? Total liability up to which month? Including the current month. Let's have a relook again. The registered person has discharged his liability towards output tax through the electronic cash ledger for an amount which is in excess of 1% of the total output tax liability applied cumulatively up to the said month. So the total liability you need to compute cumulatively including the current month. Up to the said month means it includes the said month. So therefore friends, you need to first find out what is the liability of July. Let's say the liability of July happens to be 5 lakhs. So what is the total liability ranging from April, May, June, including the current month July? The total liability is 5,40,000. So far, how much have you paid through cash ledger? So far, you have paid 6,000 from your cash ledger. So 6,000 is already paid from the cash ledger. The total liability is 5,40,000. 1.11% is already paid from the electronic cash ledger cumulatively, including the current month of July. So therefore, for this particular month, 86B, you have already satisfied. You have already satisfied 86B even for the current month. So therefore friends, as regards as July is concerned, total liability is 5 lakhs. Input tax credit available is 6 lakhs. Total liability is 5 lakhs. Input tax credit available is 6 lakhs. This liability of 5 lakh rupees can be discharged entirely from the electronic credit ledger. You need not pay 1% from cash ledger, which means that otherwise 5,000 you should have paid from the cash ledger, which is now not required because you have made a cumulative check. You considered April, May, June, included the liability of July, found out the total liability including that of the current month. You have checked in the history what is the amount which you have paid through your cash ledger. Does it exceed 1%? The answer is yes. So, which means that you have already satisfied 86B for the tax period July as well. Cumulatively from April, May, June, July, 86B is satisfied. Let's take another example. Same statistics. For July, it is 7 lakhs. Input tax credit available, it is 8 lakhs. We are taking about the tax period July. Total liability is 7 lakhs. Input tax credit available is 8 lakhs. We check total liability up to June. April, May and June, it was 40,000. Credit, paid through credit 34,000. Paid through cash 6,000. So if you are considering April, May and June, you have paid 15% from your cash ledger, which means 86B you have already complied or it is not required to be complied for July. The answer is wrong. Friends, please concentrate. As regards as total liability is concerned, you will have to consider the liability of July as well. So now friends, let's have a look. The total liability April, May, June 40,000. July is 7 lakhs. Total liability is 7,40,000. So far, how much have you paid from the cash ledger? So far, you have paid from the cash ledger 6,000. So 6,000 divided by 7,40,000, it is 0.81%. It is 0.81%, which means that if you are not paying anything from the cash ledger for the tax period July, you are not in compliance of Rule 86B, which means that you will have to pay from your cash ledger to comply with Rule 86B. I repeat, when I check cumulatively, total liability 740, so far paid from cash 6,000. When I am saying total liability, it is including the output tax liability of the tax period July as well. 740 total liability, paid from cash ledger 6,000, falling short of 1%. So therefore, I will have to pay from cash ledger for the tax period July. The question doesn't end here. The question is, how much should I pay? How much should I pay from my cash ledger so that I am complying with Rule 86B? Now friends, one answer could be, total liability how much for July? 7 lakhs. Pay 1%. Pay 7,000 rupees from electronic cash ledger and you comply with Rule 86B for the month of July. Friends, there could be some planning which can be done over here. Friends, please understand, the provisions of Rule 86B is requiring me to comply with Rule 86B on a cumulative basis. It is not asking me to comply with Rule 86B on a month-on-month basis. Now friends, please analyze what is the shortfall over here. Please analyze what is the shortfall over here. How much is my total liability including that of the month of July? 7,40,000. How much is 1% of that? 7,400, which means if I pay in total ranging from April, May, June till July, if I am paying 7,400 rupees, it is a valid compliance of Rule 86B. So therefore, I have already paid 6,000. It is sufficient if I pay 1,400 more. From my electronic cash ledger, for the tax period July, it is sufficient if I am paying 1,400 more. Friends, please understand, 6,000 is already being paid. 1,400 if you are paying more, it becomes 7,400. Now if I look into cumulatively, 6,000 paid till June. For this month, I will pay 1,400 from my cash ledger. It would become 7,400. Now if I check cumulatively April, May, June, July, 7,40,000. 1% of it is 7,400. I have complied with Rule 86B on a cumulative basis. So friends, the point is 86B needs to be complied on a cumulative basis for all the tax periods in a financial year. If cumulatively I am satisfying 1% of the total liability having been paid from the cash ledger, it is a sufficient compliance of Rule 86B. So now friends, in this example, here we go. Total liability is how much? 7 lakhs. Out of this total liability, how much I am going to discharge from my credit ledger and how much am I going to discharge from cash ledger? From cash ledger, it is only going to be 1,400. From cash ledger, it is going to be 1,400 and the difference of 698,600. I will be discharging it from my credit ledger. And therefore, friends, the credit ledger carry forward is going to be 1,01,400. Credit ledger carry forward to the next month is going to be 1,01,400. I am sure you are able to follow this. Let's take another example. For the month of July, total liability is 5 lakhs. Input tax credit available is 6 lakhs. RCM liability for the month of July is 50,000. Friends, always remember, as regards as Rule 86B is concerned, your total liability, you should not consider RCM liability inside the total liability. Whenever you are checking whether have I discharged 1% from the cash ledger, you should not consider RCM taxes paid through the cash ledger. You might have paid RCM taxes through cash ledger only, but when you are going to consider what is the total amount I have paid from my cash ledger, you are not going to consider the RCM liability paid from cash ledger. So when you are going to see 1%, total amount paid by cash ledger divided by total liability, neither the numerator nor the denominator is going to have any RCM effect. Let's have a look at the statistics. So July, total liability 5 lakhs, ITC available 6 lakhs, RCM liability is rupees 50,000. The data is given for April, May and June. Your normal output tax liability is 10,000, RCM liability is 1,000. Total liability is 11,000. Similarly for May, 11,500, June 22,000. How much have you discharged through a credit ledger? For April 9,000, May 7,000, June 19,000. Through your cash ledger, RCM, obviously you have to pay through cash only. So 1,000 was RCM liability, I paid it through cash, 1,500 through cash, 2,000 paid through cash. Discharge through cash ledger, 1,000, 3,000 and 1,000. See, general output tax liability was 10,000. I paid through credit 9,000. Difference 1,000 is through cash ledger. 10,000 minus 7,000, 3,000. 20,000 minus 19,000, 1,000. So this is the data which is given. Now I take the total. I need to find out whether for the month of July, should I pay anything from my cash ledger. So here we go. I take the data for July. For the month of July, my normal output tax liability is 5 lakhs. RCM liability is 50,000, totaling to 5,50,000. Now friends, the credit which is available with me, or let's say the credit which is available with me is 6 lakhs. I need to find out whether this normal liability of 5 lakhs, can I pay it entirely through my credit ledger? This is what I am supposed to find it out. So now friends, I need to take the cumulative figures. Now as regards as cumulative figures is concerned, friends, if I am taking the total amount which is paid through cash, it is 60,500. And what is the total liability? 594,500. If I am making this mistake, which means that total liability paid through cash 60,500, total liability 594,500, it gives me 10.17%, which means that if I am including RCM figures, I am getting an answer that I have already complied with Rule 86B on a cumulative basis. However, friends, as we just discussed, for the purpose of computation of 86B, neither the numerator, which means liability paid through cash ledger, nor the denominator, which means the total liability, will include RCM figures. So friends, what is the normal liability, forward charge mechanism liability, which I have discharged through cash ledger till date? It is 1,000, 3,000 and 1,000, which means totaling 5,000 rupees I have paid through the cash ledger. So it is going to be 5,000 as the numerator. What is my normal output tax liability cumulatively, including the liability of the current month? 5,40,000. So 5,000 divided by 5,40,000, I get 0.92%, which means that so far cumulatively I have not satisfied Rule 86B. So therefore, I have to make some payment from my electronic cash ledger. To the extent I am going to meet the shortfall, I will have to make a payment from my electronic cash ledger. So friends, total liability is 5,40,000. 1% of 5,40,000 is 5,400. It is 5,400. How much have I already paid through cash ledger? 5,000. 400 rupees normal liability. 400 rupees normal liability, I will pay it from my cash ledger. If I pay so, it is a valid and sufficient compliance of Rule 86B. However, friends, for the month of July, I also have an RCM liability of 50,000, which of course I have to pay only through cash ledger. So friends, the total amount which I need to pay through cash ledger for this particular tax period is 50,000 RCM, of course, which I always have to pay from cash ledger only. For the purpose of complying Rule 86B, 400 I need to pay from my cash ledger. That would be a valid compliance of Rule 86B on a cumulative basis. Let's say for the tax period April 21, my total liability is 5 lakhs. Input tax credit available is 6 lakhs. Now I go to the history. I check for the past financial year 2021. Total liability was 100 crores. How much I have discharged through credit? 90 crores. Through cash, 10 crores. In the last financial year, I have discharged 10% of my total liability through cash ledger. So friends, for the current financial year, in the month of April 21, should I pay anything from cash ledger, or I have already complied with Rule 86B? Friends, please understand, this particular cumulative provision which is there, it is applicable, as we discussed, for a financial year. It is for a financial year, which means the cumulative calculations what you are going to do, you have to check it on a financial year wise. Now friends, this having been the first month of the financial year April 21, whatever you have done last year will not matter. For the proven track record under GST is concerned, current financial year is relevant. For the proven track record as far as income tax law is concerned, preceding financial year is relevant. Preceding 2 financial years for which the due date of filing income tax returns has already elapsed was relevant. So preceding financial years were relevant. For the relaxation of refunds, if you have already obtained a refund of greater than 1 lakh rupees in the preceding financial year, if you had made zero rated supplies under LUT, or if your tax structure was inverted duty structure, and if you would have got a refund of rupees 1 lakh from your unutilized input tax credit, then in the current financial year 86B you need not comply with. So friends, so far whatever relaxations we have seen, everything was based on the preceding years. But friends, as far as this relaxation is concerned, it is only and only bothered about current financial year. Current financial year cumulatively, If you satisfy, that is sufficient. Past financial year, you might have paid 100% from cash ledger only. We are not bothered. As far as this relaxation is concerned, it is only and only for the current financial year. Cumulative status, you can check it only in the current financial year. The next relaxation for the persons having a proven track record. Friends, for these persons, Rule 86B does not apply. If the registered person is the government department, PSU, local authority, statutory body. Friends, if you could recollect what was the intention behind introduction of 86B, it was to have a control and check on input tax credit frauds. Now friends, these are all controlled enterprises where there is no fraud, there are no chances of having input tax credit frauds over here. So friends, for these persons blanketly 86B is not applicable. If you could recollect, these persons were also those persons for whom Aadhaar authentication was not required. So friends, for these control enterprises, certain relaxations have been given. For them, 86B also is not applicable. Let's take a scenario, friends. Let's say there's a person registered under GST. He operates at a gross profit margin of 0.50%. It is not 5%. He is operating at 0.5%. Let's have a look how his figures look like. Purchases 1000 crores. Input tax credit thereon 180 crores. 0.5% is his margin. 0.50% is his gross profit margin. So he makes a sale at 1005 crores. Output tax 180.90 crores. Let's have a look at what is going to be his compliance considering Rule 86B. His output tax is 180.90. His input tax is 180. Now friends, what does 86B say? 86B says that input tax credit can be utilized only to the extent of 99% of the output tax liability, or to rephrase it, at least 1% of the output tax liability needs to be paid through cash. Now friends, the amount which he has to minimum pay through his electronic cash ledger is going to be 1.8090. 180.90 is his output tax liability. Minimum 1% to be paid from cash, 1.8090. The balance amount he can pay through his electronic credit ledger, 179.091. He pays it from his credit ledger. So total balance available in his electronic credit ledger 180. Utilized for the payment of output tax 179.091. So friends, balance input tax credit which is being carried forward is 90.90 lakhs. Balance input tax credit which is being carried forward is 90.90 lakhs because of Rule 86B. Now friends, this person has a problem. This person has a problem stating that when can you ask me to pay 1% of my output tax liability? When can you ask me? He's saying the government. The person agitates to the government, states that when can you ask me to pay 1% of my output tax from my cash ledger? Only when at least my gross profit margin should at least be 1%. If my GP ratio is more than 1%, it is manageable. But friends, in an industry like mine, when the GP margin itself is 0.50%, and if you ask me to pay 1% from cash ledger, I am going to be at loss. The government says, are you joking? You have availed the input tax credit. It is only that we are not allowing you to utilize in this particular month. We are not asking you to treat this input tax credit as cost. Why are you treating this as cost? You utilize it in future months. He says, each month the story is going to remain the same. I would buy at 1000, I would sell at 1005. Every month, month on month, this is going to be the transactions. So each month I would have an input tax credit carried forward of 90.90 lakhs. So the government says, never mind, carry it forward. He says, what would I do carrying it forward? Only if I have some source where I can utilize this credit, there is sense in keeping these in my current assets. When I know that in future, this is the business which I am going to do, this is going to be gross profit margin, what sense does it make in just carrying it forward as a book entry? In fact, I know that I will not be able to utilize this input tax credit which is being carried forward, because next month also my purchases will be 1000, my sales would be 1005. I would again have to pay 1% minimum from my cash ledger. Again I would have a carry forward. Each month credit would keep on carrying it forward. Are you going to give me a refund of this carry forward? The answer is no, because all of us know refund is going to be allowed of the unutilized input tax credit only in two circumstances. 1. Zero rated supplies. 2. Inverted duty structure. Neither this is a zero rated supply, nor it is an inverted duty structure. Neither it is an zero rated supply, nor it is an inverted duty structure. I am not in a position to claim the refund of it. What is the sense in just getting it carried forward in the balance sheet under current assets? Since I know it is not going to be utilizable in future, I am going to expense it off. I am going to write this in my books, write off this in my books of accounts, and rather my books of accounts would look like this. Just have a look. Purchase 1000 crores, sales 1005 crores, gross profit 5 crores. So I have over here GP as 5 crores. I have other overheads to the extent of 4.5 crores. I have some other expenses, overheads to the expense of 4.5 crores. And this 90.90 lakhs which is lying in my current assets, I don't have any purpose of this. I will not be able to utilize this because of your rule 86B. I will have to write off this as well. So now I read this 90.90 lakhs, I expense it off to my profit and loss account. Because of this rule 86B, I am under a loss of 0.409 crores. Because of this rule 86B, I am operating at a loss of 0.409 crores. Who is answerable for this? The government found sense in this argument. So now friends, other than the relaxations which we have already discussed, here we got another relaxation which states that provided further that the commissioner or an officer who is authorized by him in this behalf may remove the said restriction after such verifications and safeguards as he may deem fit. Which means that you will have to make an application to the proper officer, satisfy that how this rule 86B is disturbing you, and if he deems it fit, he can remove this restriction of 86B which is placed on this particular registered person. So friends, as regards as all the relaxations which we have seen so far, they were all general relaxations applicable to all registered persons. This relaxation is assessee specific, registered person specific. The one who is feeling the pain, he needs to make an application. He needs to state, look boss, I am not a tax evader. I am not a person who is carrying out income tax frauds. Have a look at the transactions which has been taken place. I do not fit into the other relaxations. I may not be a person who is paying income tax of more than the limit which is required for this relaxation. I do not apply because I am not eligible for application of refund under GST. I do not fit into the other relaxation, but I have a genuine problem. This 86B is eating up my business. What was the intention behind introducing 86B? You did not want input tax credit frauds to happen. You check my history. You check the transactions. You satisfy yourself as to my genuinity. And then you lift the restriction which is placed by rule 86B. So rule 86B states that where the authorized officer, if he is satisfied, then after verification and such safeguards as he may deem fit, he may put some condition. He may say, give me a bond, give me a bank guarantee. So some safeguards he may put, and thereafter he can uplift the restriction which is placed by rule 86B. So I am sure with this example you are able to understand what is the power of this particular relaxation. It is there to relax the restriction which is placed by rule 86B for certain specific assessees on application. Let's have another example. Let's say there is a person who starts business on 1st of April. A person who's starting business on 1st of April. He makes a capital expenditure of 1000 crores. GST involved therein is 180 crores. Output tax for the month of April is 100. Output tax for the month of April is 100. Input tax for the month of April is 99.5. We are speaking in crores. What is the minimum amount of which is payable through cash ledger according to Rule 86B? It is 1 crore. Balance total liability 100 crores. 1 crore is payable through cash ledger. The balance 99 is payable through credit ledger. So after paying 99, the amount of credit which is going to be carried forward, the amount of credit which is going to get carried forward, it is going to be 180.5. You had 180 credit already, plus there was 99.5 and minus there is 99. So you have got 180.50 credit which is being carried forward. Now please tell me, I am sure you have understood by now what is the problem which this registered person is facing. He says, I already have made a huge capital expenditure of 1000 crores where the GST involved is 180 crores. Now, rather than enabling ease of doing business, supporting me in my business, helping me to bring down this accumulated balance of credit which I am having to the extent of 180 crores because of the capital expenditure which I have made, you are increasing my balance. He is agitating with the government. It was 180 crores, now it should come down, because only when my electronic credit ledger balance will come down, it means that I am encashing this money. But rather than this, you are increasing it by another few lakhs. It has now become 180.50 crores. What was your intention behind bringing 86B? To check input tax credit frauds. Do I look like a person who is going to make frauds on income tax after? Do I look like a person who is going to make frauds in input tax credit after having invested 1000 crores in capex? If you want, these are the bills. This is the project. You can come and verify. Is the problem of this person genuine? The answer is yes. So therefore, friends, he can utilize this relaxation which is there. He could make an application to the authorized officer and he can provide all the documents for verification, and after the officer is satisfied, the officer on this particular case to case basis, he can uplift the relaxation. He can uplift the restriction and provide relaxation under Rule 86B. Friends, the crux of the discussion of Rule 86B. So far whatever we have discussed, almost we have completed the entire discussion under Rule 86B, excepting few touch up points are left here and there. So now friends, 86B tells us the crux of the discussion: if taxable supplies other than exempt and zero rated supplies is exceeding rupees 50 lakhs in a month, then for that particular month only up to 99% of the tax liability to be discharged by credit ledger, which means that at least 1% has to be discharged by cash ledger. Now RCM always has to be paid by cash ledger and it should not be considered for the purpose of computing the 1%, neither in the numerator nor in the denominator. Are there some relaxations which are given? The answer is yes, based on proven track records. As regards as income tax is concerned, if you have paid tax more than a lakh for 2 financial years for which the due date has already expired. As regards as GST is concerned, they can apply Rule 86B cumulatively till the current month. Another government department, PSU, local authority, statutory body, 86B is not applicable to them. In case if you have claimed a refund of input tax credit, refund of unutilized input tax credit, either you have made zero rated supplies under letter of undertaking or your duty structure is an inverted duty structure. And if you have claimed a refund exceeding 1 lakh in the preceding financial year, then 86B is not applicable to you. And you can make an application to PO if your case is not covered in either of the relaxations and if your case is a genuine case. If your concern is genuine, you can make an application to the proper officer who, after verification, if he is satisfied, this is a discretionary power of the proper officer. If he is satisfied, he can uplift the restriction which is placed by Rule 86B. Now friends, what are the consequences of not complying with Rule 86B? Rule 86B is that I need to pay at least 1% of the total liability from my cash ledger. What if I don't do so? Is this automated or it needs to be done on a self-assessment basis. This needs to be done on a self-assessment basis. Assessee himself has to assess, and then if 86B is applicable to him, make the calculations accordingly and then file the returns. What if he doesn't do so? Now friends, if he doesn't do so, the first thing is interest under section 50. He will have to pay interest under section 50. Why interest under section 50? If he has not paid 1%, I repeat, if he has not paid the 1% of his output liability from his cash ledger, does it mean he has not paid at all? The answer is no. He would have paid from credit ledger. Even though his value of taxable supplies other than exempted and zero rated, it might have crossed 50 lakhs. I should ideally pay 1% of the total liability from cash ledger. Still, I discharged my 100% liability from my electronic credit ledger. Is the portal going to stop me? The answer is no. Why? Because it is not automated. It is based on self-assessment basis. Now what if I didn't comply with this? What would happen at the most? What would happen at the most? I have paid the liability, right? Ultimately, I have discharged my output tax liability. Whether through credit ledger or cash ledger, why is the government bothered? Friends, please understand. If 86B was complied with, the government would have got money directly to their bank account. That 1% which you should have paid, which you were supposed to pay from your electronic cash ledger, had that 1% been paid through your electronic cash ledger, the amount would have gone directly to the bank account of the government. Now, since that 1% liability you have not discharged through your electronic cash ledger, you have discharged through your electronic credit ledger, it is a merely book adjustment entry in the books of accounts of the government. The money really doesn't flow to the bank account of the government. So friends, to that extent, the working capital of the government is impaired. So hence, you will have to pay the interest. And friends, not only interest, whatever 1% which you did not pay from the electronic cash ledger, you will have to pay it now. So what does it mean? I have already discharged 100%. You are asking me to additionally discharge 1% through cash ledger, which means I am paying more than what I am required to pay. The government says, no, you don't pay more than what you are required to pay. What you did not pay through cash ledger, you pay it now along with interest. What you wrongly paid through your credit ledger, go and apply for a refund. Are you following this? What you did not pay through your electronic cash ledger, you are paying it in a delayed manner now. Now you pay it along with interest. What you wrongly paid, that 1% which should not have been paid from your credit ledger, what you wrongly paid from your credit ledger, you go and apply for a refund of it. So friends, what are the consequences? Let's take an example. Output tax is 1000, input tax credit 1100, payable by cash 10 if 86B is followed, payable through input tax credit 990, balance ITC carried forward 110. If 86B is not followed, output tax same 1000, input tax same 1100, payable by cash nil, I am not following 86B, entire amount paid through credit 1000, ITC carried forward is 100. So friends, as we can see, here ITC carried forward is 110, here ITC carried forward is 100. Why is that difference of 10? Because here 10 rupees is paid through cash ledger. To that extent, credit ledger doesn't get utilized. So there is an increase in the credit ledger carry forward balance. It stays 110. So now friends, in this case, if the department is going to issue a notice for the non-compliance of Rule 86B, then rupees 10 needs to be paid through cash ledger along with interest thereon, and whatever is the 10 which you wrongly paid through your credit ledger, you can go and apply for a refund. So application of refund, this becomes an unnecessary headache. Now friends, this result of non-complying with Rule 86B is not written anywhere, it is just by implication. It is just by implication. But is there any place where the consequence of non-complying with Rule 86B is mentioned specifically? The answer is yes. Friends, we have already seen this in the chapter of registration. In the chapter of registration, when we were discussing where cancellation of registration can be initiated suo motu by the proper officer, there were certain grounds. Only when these grounds got attracted, cancellation of registration can be initiated suo motu by the department. So friends, what were those grounds? In those grounds, if you could remember, one of the ground was violation of the provisions of Rule 86B. Violation of the provisions of Rule 86B. At that moment, we had kept this on hold, we had kept this on pending, stating that we would discuss this when the appropriate time comes. This is the appropriate time. Now we understand what is 86B, and friends, miscompliance or non-complying with the provisions of Rule 86B would result into cancellation of registration suo motu by the proper officer. I am sure you are able to follow this. This was as regards as consequence of non-compliance of Rule 86B. Friends, we have spent quality amount of time understanding Rule 86B. Let us spend few moments understanding and appreciating the difference between 86A and 86B. What is 86A? Friends, 86A is a blockage of your input tax credit ledger. It is a blockage of your electronic credit ledger. 86B, it is a restriction or it is a capping which is placed on utilization of your electronic credit ledger. So 86A, ITC is blocked for utilization for specified reasons, either ineligible ITC or fraudulent ITC. Rule 86B, ITC not to be utilized in excess of 99% of total tax liability, which means at least 1% of your total tax liability needs to be paid from your electronic cash ledger. And it is for specified persons. Who are those specified persons? Those persons whose value of taxable supplies other than exempt and zero rated supplies in a month exceeds 50 lakh rupees. 86A blockage is done by the proper officer, whereas the restriction or the capping of 86B needs to be complied with on a self-assessment basis by the registered person. Relaxation, the proper officer not below the rank of AC, the one who is authorized by the commissioner. The proper officer as authorized by the commissioner whose rank, this proper officer's rank should not be below that of an assistant commissioner. He can grant relaxation, he can uplift the blockage which is done under Rule 86A. Here the relaxation, yes, there is a proper officer on a case-to-case basis. If you are feeling that this 86B is hurting you, you can make an application, provide all the relevant documents, and if the officer is satisfied, he can uplift the restriction which is placed by Rule 86B. Miscompliance. Miscompliance of 86A is not possible because this is there at the officer's hand. The moment he is going to block your electronic credit ledger from being utilized, you naturally cannot utilize it. There is no possibility that you can miscomply with Rule 86A. Rule 86B, yes, miscompliance is possible because this needs to be done on a self-assessment basis. What is the consequence of miscompliance? The consequence of miscompliance is, one, you will have an interest liability because you have not discharged, assuming entire 100% you have paid through your electronic credit ledger. Now, since you have not discharged the liability from the electronic cash ledger, for the delay in depositing, whenever, if suppose you have miscomplied, you receive a notice asking that you need to comply with 86B, the delay in depositing the tax through your electronic cash ledger, for the delay you will have to pay interest, and also your registration is liable to be cancelled. Under section 29, the proper officer can suo motu initiate cancellation of registration, and one of the grounds, one of the reasons why the proper officer can do so is violation of the provisions of Rule 86B. Time limit. Here 86A blockage will be there until it is uplifted by the officer, or if it is not uplifted by the officer, it will cease to have effect after a year. So the maximum time 86A is going to pinch you is going to be 1 year. As regards as 86B is concerned, there is no such outer time limit which is available. For all those tax periods where your turnover has exceeded the threshold, where the value of taxable supplies other than exempt and zero rated supplies has exceeded 50 lakhs, for all those tax periods 86B is applicable to you unless otherwise you are covered by the specific relaxations which are there in Rule 86B. Unless you are covered by those relaxations, 86B is applicable to you. There is no outer time limit which is available. So these were the minute differences between Rule 86A and Rule 86B.
Subscribe to LearnCab and hit the bell icon to get notified.